let's give this another shot. All right, we entered this trade. We kind of already know how this one plays out. This one, I think originally we wanted to sell, but here you want to buy because of the minute chart. Take a look at that minute chart. It's a quick spike down. It just looks like the market's gonna shoot right back up. If you watch part one, this makes a lot more sense now. So yeah, it was a spike down on the minute chart, and considering that spike down, you would just buy it right back up as the thing that is likely to happen. We're chasing what the market is going to do. We're trading with today. There's trading against and trading with. And yeah, I should probably make that a note. So yeah, peace. What am I saying? Bye? No. We're going until we hit our goal. And it's going to the tip. I got the target. And I honestly don't remember how this one plays out. Oh. Oh. Okay, we would have got that. Oh, not. What? Oh, wow. Okay, I don't remember that. Did we take that trade in part one? I don't remember. But nice. I mean, it's pretty obvious that the market was going to do that. Not obvious I was going to do that, but obvious as in that's what the market was supposed to do, which is come back down after pushing that high. And it looks pretty much the same thing on the minute chart. And so shorting there on the second entry short, very good trade. So remember, we decided to go with just because we predicted that was going to push on down, and push down very predictably. So due to the fact that was predictable, and the market it went in the most obvious like direction, so we're gonna that was the indication to trade with the market now. I think it drops somewhere here, doesn't it? In the trade. Alrighty. Take a look at that real quick. Swing high first entry, second entry. So 1 tick entry was the best play there. Yeah, maybe if we use the minute chart here. Oh yeah, definitely. Yeah, so lower highs, this closing thing, yeah, selling there was the best idea. Best thing to do. So we gotta rely heavily on the 1 minute tick, 1 minute chart before 8:30. So this move was extremely like cliche for the market to do, so it's predictable. So shorting there was the best option, because remember we're trading with the most practical moves that the market's gonna make, at least up until 8:30. I think this shoots up right here, right? From what I remember. I think so, yeah. Alright. Spike. Huge spike on the minute chart, as you can see. So you can't just predict that the market's gonna do this. It's a huge spike, so automatically the most like cliche thing is to sell back into it. So that's what we're gonna do, because people are gonna try to outsmart that, and that's gonna be 90% of people. So doing the actual obvious thing is gonna be what essentially the 10% is doing. Nice. Just switched my hotkey from F11 to Alt Shift, so no more full screen windows. And it's very much cozier instead of trying to like do this and look for. Just relax and do that. Alright, so this is the last trade we took before we close down. See how it goes. Alright, 1 sec entry. It's your first opportunity to enter this crazy uptrend that has been up since 5 a.m. Okay, good trade. Good trade. This is so comfortable and it's so clicky. Look, I don't know if you heard either of those clicks, but it's nice. Alright, 821. We're at 1150. Not too shabby. So everything here on out, we don't know what's going to happen. It's like we're trading today. Or what was today, but just for this. Should we save this for the weekend? Nah, we're working on the weekend. We just want to test the strat to see if it works. Alright, so the market pushed up really fast. Looks like 830 came in really quick. Yeah, the swing high first entry, second entry. Let's go ahead and just see. So it's probably actually a good strat to stay out that second entry after 830 just to see what the market will decide to do, whether it'll start doing the obvious with the market or against the market. So let's see. We had a swing high first entry, second entry. So we're gonna skip out on this guy. Let's see what happens. So we know it pushes up. Let's see if we would take it. So new swing high first entry, second entry. So now since it's 830, we take our eyes off the minute chart and just focus on the 950, which we should probably switch to. Actually, there's no setup, so we're good. We're good. And yeah. Oh wait, yeah, there is no swing high first entry. Yeah, no setup. Okay, so let's continue. All right, essentially we have the swing high first entry, second entry, and I guess you can still predict from here. So it looks like the market wouldn't be reversing here because you have that huge spike, but then the market shoots up right there. So it looks like we're going to be trading against. Yep. Come on, don't leave us. It left. Ugh. Couldn't take a 1 ticket there, unfortunately. And to go for a non-obvious 3-pointer, and it left without us. And that was a swing low first entry, second entry, by the way. And the market looked like it was going up, gonna go down from here, but at 8:30, according to this second entry, it looked like the market was supposed to go down, but it pushed up. So now we're trading against what the market looks like it's going to do. So you got to make that switch at 8:30. So we were trading with the market with, and now we're trading against. Not against the trend, just against what the market looks like it's going to do, which is not necessarily always with the trend or with spike. It's just you have to have the overall read and what overall patterns just kind of look like. Yeah, it's kind of weird. Hopefully I can explain this enough so I don't get lost in my own like what the market looks like, doesn't look like, sort of thing. Okay, Google, play this song. Market shooting up. I will surround you and give light to our world. After all, Goodbye by Puddle Robinson. It's such a good song. This is like the music of like the stock market going to space. So intense. I don't know if you can even hear it. It's a little difficult to tell what the market's going to do here. What it's supposed to look like. I would like a little bit more of a move. Bring yourself. And if it's true. Alright, this is live. This was today. Let's see if we can get some trades up in here. After all. F's in the chat, boys. Dang, man. So I was, our strat is to trade up what the market looks like it's going to do, but it's like so difficult when you have spikes. So I guess the best overall advice is something we've traded always before. When you pass the level of resistance, buy out of it, because people are going to try to trade right back into there. So buying there is actually the best option. And I guess when you have spikes, the market's always going to try to trade back in. That's something we have to get used to, because when we have spikes, it's not very obvious or common in my head to be like the market's going to go this way, or this way, or this way. Because I overthink spikes, and I've never really focused on what spikes should be doing. But essentially, when you have a spike, the way it should go is back down. And whether you're trading against or with that will be up to what obviously you decided to do. So in this case, buying there was the best thing to do, because we're going against what the market looks like it's going to do. And when you have that spike, it doesn't necessarily look like it's going to correct all the way down, because we're not used to seeing that. We're very used to seeing like consolidation or even this. And so we have to understand that the market commonly or will like to just trade those spikes back down. And here is a very good buy because of two very good reasons that we've always taken before. For one, it's your first opportunity. Actually, no, it's you break out of the level of resistance and you come back, and people like to trade back into the range. And so buying there is actually the significantly better trade. We were just trading solely on something else. All right, I think I broke a tick lower here, but we're gonna kind of as swing low. Yeah. Gee, believe it, man. All right, so Jesus, I'm trying my best to not pause. Shit. So the market looked like it was going to correct, in my opinion, but I could be very, very wrong. Nice. So the reason why it looked like it was going to correct was because you had the final push. So you had this spike up, then the push up, then the push down, then the final push up, and it finally looked like it was going to correct. And that's something that happens very often. You'll get like this sort of thing. And I'll push right back down. Usually it looks more like this. And so it looked like that was probably going to happen. So you can imagine a ton of people selling or people taking profits. And that's what shot the market right up. Stop hitting F11. So we're 101 so far. Ooh, okay, hold on. Pause. Okay, I gotta stop fast forwarding. Jeez, this is our signal bar, so hopefully we can still get in this trade. I'm kind of using the minute chart, but not really. Yeah. No. Yeah. All right. So we knew to buy there. Cool. Because you had a couple of things going on. For one, it looks like the market's going to keep pushing down. That's the main thing. Always decide whether that market's going to keep going in the direction you want it to go, or if it's going to. So decide where the market's going to go and decide. So we're already trading against. So it looks like it's going to push down. And so since 8:30, we're going to have. Since 8:30, we have decided to trade against it. So buying there is the best option. Also, there's two spikes down, so which gives even more of an indication to be like, hey, let's go long. And that's your signal bar. And yeah, that would have been a fantastic trade if you ask me. I fast forwarded again. Damn it. Okay, hold on. Swing low first entry, second entry. I would buy. Let's see if we could still get in the trade. Actually, we would have to enter at a non-obvious, so we still actually wouldn't get in the trade yet. Quite yet. Not that we will. But we still have to trade a non-obvious. And it looks like it's going to keep pushing up. Yep. Oh, it doesn't break below above there. Then we can stick with the train. Pretty sure it's going to break above there though. Oh. Do we stick with the train? Do we stick with the train? Sell. Yeah. Looks like the market's gonna keep pushing up, so I want to sell here. Double tap, first entry. Oh, sell. Oh gosh, did we do the right thing? Or one tick off. So one tick up. One tick up. Oh, nice. So as you can see, we took that as a swing high, first entry, second entry. I was going to take that as a double top first, but it's obviously a swing high because your last swing's there. Then the first entry, then the second entry. I wanted to sell. This was the opportunity to sell because, or an opportunity to sell on a one tick entry because it's still sideways, no downtrend necessarily. You could have done a non-obvious. Actually, that probably would have been a significantly better trade because you have that level of resistance, but we were in a rush to get into the trade, and so we sold. But a non-obvious would have been significantly better, but nonetheless, you wanted to sell because you had this consolidation here, and that's the key thing to that happened to make us want to switch from buying to selling. At this point right here, it looks like the market might keep actually going down, which is why we would buy. But then after the consolidation, because we would buy because we would go against the market, but after the consolidation right here, it starts to look like the market's going to move up, especially on the minute chart. If you take a look at it here, like at this point, it looks like the market's supposed to push down here, but after this right here, it consolidated, and now it looks like the market might actually start pushing up, especially with that huge wick on the bottom on the minute chart on that specific bar, and still consolidation. Oh yeah, we are already pushing down, so it looked like the market was going to start pushing up, and so we wanted to sell there. And yeah, so that consolidation was everything in that trade. It's weird because we don't really like look for consolidation or anything. It's just based on the way the market looks, which is nice and interesting, which is hopefully something we can stick to for the long run, and just stick to it. And that way in the future, when we get something we've never seen before, we can still trade it because, it's just, we can see the market. We've seen it. That could have been a triple top and a first entry, second entry. On the minute chart, it looked like the market was going to push down here, so buying there was actually a pretty a-okay option, and you would have got it just for the scalp. Unless it pushed up first and it pushed down and then pushed up. Actually, I don't think it even comes to your stop. No. See if you can hit our goal of 30. Stop. Damn it. Okay. Swing high, first entry, second entry. Market looks like it's going to push down. Let's buy here. Doesn't look like it's going to push down. It does. That's a super obvious thing. Don't push down all the way. Don't push down all the way. Our stop is somewhere like right here. Oof, I think we would have got stopped out. Yeah, we would have got stopped out. Oh, we didn't take it. So it's hard to decide. Like, I think I would have been okay with that loss. I'm trying to rely on the minute chart a little bit, but I guess people might be. Oh yeah, there's the level of support there. People like to trade those. So you have this significantly tested level of support. People are going to be buying there, and so selling there is actually the better option. This is your signal bar, by the way. Got into trade by accident. Meant to do a non-obvious. Non-obvious should work. Yeah, because it's obviously a non-obvious. There's no strong downtrend. It's very sideways, so non-obvious would have been better, and we got it either way. Let's go. Oh, so you essentially, it looks like the market's gonna keep going on down from there. If you take a look at that, the market does that little pullback, and it looks like it's just gonna keep pushing down. The way that we decided that was gonna happen was because we imagined what would the market look like pushing up, and it just didn't look like something plausible or look like this something the market would do. It looks like the market would do something like that, kind of mirroring this over here, and just pushing that down. That's what the market looked like it was gonna do. So we traded against it since we decided a 30 blah 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 blah. Yeah, you got it. Stop hitting F11. All right, we actually managed to stop the market before it's triggered. I don't know what I'm doing right now. Oh yeah, I'm trading. Actually, hold on. This is an interesting note here. Very interesting note. I need to know what happened here. Okay. This be interesting. This is an interesting one. If we get stopped out, I got something. Did I sigh too early? Did I sigh too early? No, we were a takeaway. Okay, cool. Swing low first entry, second entry. So this one's the most obvious like trade you should take, and it was a little like, man, this is one of those trades that we just rely 100% on because it should work, and that's why your heart's beating, because if it doesn't work, you're just like, what the heck? But it works out good because there's a couple things going on. So we have the spike, of course, and since the natural option for what we're used to seeing in the market, or what the market's supposed to do when it has those spikes, is for it to correct. So people are going to try and sell it, and the market's supposed to correct, but of course we're trying to trade against what the market's supposed to do, or what it's supposed to look like it's going to do. So it looks like it's supposed to correct, we buy there instead. Correct by me, I mean it looks like it's going to come back down. And then there's also, you break above this level of resistance, tested multiple times. I mean, that's a level of resistance that was significant. And we break through there. People like to trade back into there, back into the level of resistance or support in this case. And people like to trade back into that. And so buying there against that was the best option. Did we hit our goal? We hit our goal. Oh my god. Let's go. We kind of cheated a little bit, a lot of it. But it's good to see, like, in the right state of mind, that the market would be, that this strategy actually works. Yeah, let's see if we can get 37.5. Let's just see one more trade. Maybe we just got super lucky, right? Just to make up for taxes and fees. I'm just gonna keep recording. I'm gonna just record. Just chill. We chilling. We out here chilling. Once it gets close to 9:30ish, we start to lean more towards the minute chart, because it starts to behave more like the way the tick chart does, and it's just not some crazy massive bars. Yeah. Stop hitting F11. So yesterday they raided the White House. All the Confederates and racists and whatnot. What started off as a peaceful protest. But look at the market, it's skyrocketing. It was yesterday, and this is playback of today. So I wonder how the stock market looked like yesterday. Is this it yesterday? Yeah, January 6th. Wow, nothing. Nothing crazy. This must have been when the raid happened. Right? Yeah. Jeez. I wonder what the world's like when I'm watching back on these videos. I hope it's peaceful. I hope the Illuminati got exposed. But either way, if they do get exposed, we still gotta deal with the people who built this country to what it is today, which is a bunch of racists and murderers and thieves. I hope I'm out of this country, like I found the guts to leave or something with my family and actually be happy somewhere else, if that's possible, away from other family, close friends. But there's always airplanes, right? I don't know. This world's a mess. So I'm like 25 minutes in, I started talking about this. I like to take notes on what the world, or write the time on when I hold on. Okay, just focus on this trade real quick. Not sure why we sold there, to be honest. It looks like the market was going to correct when we just sold with it. So buying there was actually the better option. I was just kind of lost. But yeah. And the market looked like it was going to correct. I don't know why I sold. If you take a look at the minute chart, I mean, come on. It started to, that turned red. So buying there was a better option. I'm not sure why. I guess because I'm thinking. Stop that by a tick. No, that's cray. But buying there was still the better option. I think that's gonna be it, folks. Some really good trading today, though. Oh, I was gonna say I like to timestamp all the stuff I say. That way I can watch back at it. I'm tired. But man, we got it. I think we got it, man. That was just a silly trade. I don't know why. I was trying to buy there, but I don't know why I placed a sell order. Just hopefully prove to ourselves that we can do this by the next trade. Just one more trade. It looks like we got a double top. Double top, give us a new high. Push higher, push higher, push higher. There you go, there you go. Oh, not obvious. So it's at a 75 high. Put that one at 75 low. I'll pause it for now. Market looks like it's gonna reverse, but is the market changing? Because at 9 o'clock, the market tends to change. I'm using a lot of the minute chart now because it's starting to look a little bit more reasonable. So it looked like the market was going to reverse, but now, actually it still does. Still pushing on up. I'm looking at the minute chart heavily. It's not a spike yet, so I'm just a little worried that we might have to flip flop. No, don't leave us. Don't leave us. Come back. Come back. Jack. Come back. Come back. Jack. Come back. Flip flop? Nope. We're good. Still might have to at 9:30 though. Because 8:30 to 9 o'clock is only 30 minutes. Yeah, good trade. Oh, essentially, the market looked like it was going to keep on pushing down there. Take a look at the minute chart. It started to consolidate. Did that. It looks like it's going to drop. Pushed up again. Now it really looks like it's going to drop. And that pushes the market up. Yeah, good trade, good trade. And we had a swing low. First entry, second entry. No, second entry right here. Non-obvious 3-pointer. Yeah. Let's see if we can just come back to 30 at least. Is tired. I should probably go brush my teeth and stuff. But no new swings. Woo, we'll end it on a good note. Alright, that'll be it. Peace out to everybody. I think we would have hit our goal today had we traded. Ooh. Swing high, first entry, second entry. Market looks like it's gonna drop. I'd buy. Ooh. Did we flip flop? Actually, no. It didn't look like it was. Yeah, it did. Let's rewind. Yeah, market looked like it was gonna drop. It's hard to imagine a spike here, so you kind of just imagine spikes, and it's hard to imagine a spike pushing up here. So I think we have to trade width now. Let's give it a shot on a width. Swing low, first entry, second entry. Looks like the market's gonna keep on pushing up. So you would buy right there. Oh, on a non-obvious. Oh, whoa. Okay, things are not working out well now. All right, we're gonna call it. Bye.